Today is 756 days to come here to lessons I learn. I'm learning. I hope this also support your dreams, your goals, allow you to become the person that you want to become. Last 5 days, I'm sharing about career paths. I shared employee, self-employed, business owner, investor, what kind of mindset you need to have for those career paths. And I shared exactly going deep down and again, okay, if you want to be employee, what kind of career paths are you able to choose? If you want to be self-employed, what kind of career paths are you able to choose? If you are a business owner, what kind of business are you able to pursue? And today I'll focus, if you choose to be an investor, where are you able to invest? What kind of things you're able to invest in, and what kind of investor you're able to be to make sure that you're able to generate the most wealth. Now, there's a lot of different things that you're able to invest in, and you need to decide what kind of career path as an investor benefits you the most, but you're able to really enjoy and do consistently. So they will share 10 paths that you're able to pursue as an investor. So number one is the easiest one, stock market investor. Stock market investor. That means that if you really want to invest in stocks, it could be, of course, big corporations, big public companies. And now you're able to choose how you will invest. What kind of strategies you will use in place to invest? Do you want to invest day to day? Do you want to invest for months? Do you want to invest for 20 years? Do you look into some kind of fundamental analysis? Do you look into technical analysis? Because there are so many different ways to invest, and that, of course, will determine your lifestyle. Because if you're a person who really invests in value-based companies, who really look into fundamentals of the company and storing that money for 20 years, of course, it'll be different than you looking into other person who really looks for the best deal and just buys and sells. Because buying and selling could be stressful. It's not for everyone. While investing for long term and being able to forget and be patient and be okay when you see that the price got down 20%, but knowing that the company is worth so much more and being able to really to be patient with results. That is a fundamental thing that you really need to understand, that, okay, I did my analysis, I did due diligence on this company, I truly believe that there is a lot of worth in it, and I will wait 10 years until it really become huge. And of course, people who choose day-to-day trading, they invest based on a lot of speculation. And that is important. Number two is a real estate investor. Of course, you can be a real estate investor. And a lot of times people really love real estate because they're able to touch, they're able to see. So no matter what happens, real estate will have some sort of value. So you'll never lose, probably 90% of the time, 99% of the chance you will never lose a whole amount. Because it's not be able to destroy altogether. So there'll be always some kind of sort of value, able to lose 20, 30, 50% of the value, but you'll never lose 100% because stocks, company could potentially go bankrupt and the money could go disappear altogether. But with real estate, you're able to see it, you're able to see that there exists, you're able to see the growth, you're able to see development. And of course, real estate, there could be a lot of different investments as well. You're able to invest in residential, you're able to invest in commercial, you're able to invest in one area, in another area. You're able to choose exactly what you want to. You want to flip, you want to rent, you want to rent a big complex, you want to rent a lot of houses one by one family. There's a lot of different ways to invest in real estate, and everyone needs to choose, okay, what I want to invest in, how much effort you want to put. Because of course, if you have one property that you manage, it will probably take a little bit less time than buying every single house one by one and renting and looking for those renters. So again, everyone is able to choose. Number three is commodities. Commodities. You're able to invest in commodities. That means oil, gold, silver, aluminium, and all. There's so many different. That of course, I mentioned the main ones, platinum. Like there's some. People who invest in the commodities, they understand there is so many more commodities that some people just do not know that there's available that you're able to trade. And there's a lot of them. And people who invest in commodities, a lot of times they have high chance to really make a lot of money. But at the same time, there's a super high risk investments, because even when the company is going and really harvest the gold from the ground. They never know exactly how much it will be there. So people guessing and they hoping they will find a lot of, but if they don't find, the price go down. If they find a lot, the price will go above and beyond. So commodities is an amazing place to be, and I truly believe that every single person is supposed to have commodities in their portfolio. But if you're a full-time commodities investor, there's a lot of things to learn. Number 4 is Forex investor. I think that for me specifically, Forex is one of those things that I love the least, because Forex has some things that you able to really invest in and not invest in sometimes the best. And my friends who really invest in Forex, they wake up very, very early to finish all the investments necessary to I don't know, like this. Of course, you're able to really trade the currencies and everything between. There's a lot of money in there, but I never invested by myself into that too much. Number 5 is crypto investor. So crypto investor is probably still quite new compared to any other investments but crypto investing is a big thing at the moment. Of course, one of the things that people didn't like crypto is because volatility. There's a huge volatility, still is a huge volatility. It's reduced over the last couple of years, but still is quite huge. It's a yo-yo investment, so you need to know exactly what's happening in the market to be able to take advantage of it. Of course, there's a lot of people who take advantage, making a lot of money, but people who really are emotional buyers, they buy and sell, and that's why they lose a lot of money as well. Number 6 is venture capitalist. This is a little bit moving from first 5 was like more investing into the things, and then the venture capitalist is more investing already into the businesses, because they're able to invest into stocks, bonds, real estate, and this is you are investing in some kind of thing. Now, like 6 venture capitalists, you're investing not in things, rather you're investing in people, because you find some early stage companies, early seed, or after seed around, and you're investing in those business because you truly believe that they will grow, and then after a while you'll be able to exit with much higher profit. And of course, there's venture capitalists are taking a lot of risk, but the reward is very, very high. Now, of course, I understand that now venture capitalists sometimes are moving to become more private equity investors, because venture capital is supposed to be investing more the early side. Private equity companies are investing in established companies that believe they has high potential to grow even more. So they have a little bit less risk than venture capitalists. Now venture capitalists moving towards being between, investing in early stage and between like very established businesses. So private equity investors is a person who really invest in really established companies who has fundamental value to really grow, improve, and get faster. So between venture capitalists and private equity, is probably venture capitalists is more really, I love this idea, I want to invest in this idea, and private equity is okay, like I want to scale this business. Number 8 is angel investor. An angel investor could be seen everywhere. He could be in pre-seed idea. It could be everywhere because they have the money, they have the necessary means, and they're able to invest in whatever they enjoy. And angel investors are called angel investors for a specific reason, because they support very young individuals who really want to start a business, and they're able to be like angels and save the day and put the money necessary to start that idea somewhere. So angels, the main purpose is investing in very early startups that startup could have at least a little bit of traction, and then when you have a little bit of traction, they're able to go to venture capitalists, they're able to go to even later to private equity investors. So the first stage, angel investor, venture capitalist, private equity investor. Number 9 is derivatives. So that means there's a lot of very high risk investments, of course, for people who do not know them, and it takes a while to learn them, like options, futures, swaps, and all other things that people are able to invest and really take advantage of the tools that are out there to really invest and make money. And the last one of the investors and the paths that people are able to take is impact investor. And what is that impact investor? Impact investor invests for the cause. So he will find opportunity to invest in in the companies that have specific costs. It could be hunger, it could be impact, it could be some kind of sustainability, or anything in between. So that means that investor is really cause-based investor. So it has like probably some allocation of his portfolio to invest in cause-based investments. And you're looking for companies who are solving some big problems and investing in those deals. So when you think about being an investor, of course, it's very important that you understand that most time people will not be one kind of investor. Maybe it'll be like 60-70% of one of those things and other parts, because it's very important to be able to diversify your portfolio. So that now when I look into all those 10: stock market, real estate, commodities, forex, crypto, venture capitalist, private equity investor, angel investor, derivatives investor, impact investor as well. So when you think about all those 10 and which kind of investor do you want to be, you realize that, yeah, I want to have a little bit this. So at some point of your life, you're able to be all 10 at the same time. And when you're able to be like majority of the time, I think that's really when you feel that, okay, I am a true investor who found a way how to invest in multiple things. Now, of course, I understand that you will not be allocation in all 10%, 10, but most likely will be 60-70% in majority of investments, and then 30% will cover in all other areas of the investments. I still believe that every single person needs to have at least few of those to really live a fulfilling life, because we need to have that investments, and those investments allows us to have more confidence that tomorrow will be better than today, because financial station is very important to have that fulfilling life. So I hope you just win, and see you tomorrow.